It is not difficult to analyze that the trend is in progress. With candlestick analysis, we can see what type of signals occur, like a left-right combo or a doji best friend, right on the T-line. The fact that we know that we're seeing candlestick buy signals every time a price comes back down to the T-line tells us with very simple factors that we're still in an uptrend. Today, the Dow is up over 200 points at an all-time high. Unfortunately, or alert indication is that the transportation index was up 250 points at an all-time high. That exuberance is a little bit of a warning. Where do most people buy? They buy exuberantly at the top. But until we see something that definitely changes investor sentiment, like a candlestick sell signal and a close back below the T-line, we have to assume that our uptrend remains in progress. PRGS is another example of what you would expect coming out of a candlestick pattern, such as the fry pan bottom. This is investor sentiment building up for some reason. We may not know what the reason is, but analyzing the chart, we can see that investor sentiment is building up, and the results are usually big price moves at the end of these trades. I think this one was up over 15% on the day. And the J-hook pattern is very relevant and very easy to recognize. You can see wave one coming out of this fry pan bottom. And here's what we know about each individual signal. There's our little hammer signal, indecisive. There's our doji, indecisive. There's bullish confirmation of the doji. What is it revealing? That the T-line is acting as support. What happens when it starts trading positive today? Further confirming that this J-hook pattern's in progress, making the congestion area up here the next likely target. Candlestick analysis is merely the identification of what's happening in investor sentiment, the same way investor sentiment has resulted or reacted for the last 300-400 years based upon the observations of the Japanese rice traders. Having the ability to analyze specific commodities like crude oil. Crude oil has been up strong. What's that usually tell you about the individual stocks in that area? They're going to be up strong just based upon human nature. Whiting, for example, has been in a strong uptrend. Notice this signal right here, breaking out through the 200-day moving average. This is one of the common signals based upon human nature. We call it doji sandwich. Big up day, then a doji. What do we know about the doji rule? That the price is usually going to move in the direction of how they open after a doji. A positive open, especially right here on the resistance level of the 200-day moving average, told us more than likely it was moving in this direction. That gave us two pieces of immediate information. One, it told us that the 200-day moving average was not going to act as resistance. And two, this day right here was probably going to have about the same magnitude movement as this day right here, which would further confirm the 200-day moving average was not going to act as resistance. From that point, it was easy to maintain this uptrend because of one simple factor. They couldn't close it below the T-line. Candlestick analysis is probably the most concise and accurate analysis of price movements because it's based upon 300 to 400 years of back testing. And not only back testing, but the Japanese rice traders utilized it to make fantastic fortunes over those centuries. That'll be it. We'll see you in the chat rooms.